Hi folks, this is Tony for aminutetomidnight.com and I want to make this short video about some aspects of the economy. I hope that you will find this video helpful, and even if you don't like some of what is presented in it, try to keep an open mind. We've just seen the stock market close today about 300 points down. It's on a roller coaster ride. We've just had the first day at Davos, the World Economic Forum, and there are certainly some indicators that things are not really too rosy at this point in time. On the first day at Davos, we've seen Prime Minister of New Zealand Jacinda Ardern harping on about the boogeyman. I beg your pardon, sorry, talking about climate change and how we need to be guardians of the earth, along with Al Gore and David Attenborough and Prince William. And from an article in The Guardian about Davos's first day, IMF, no Brexit deal and Chinese slump are the biggest economic risks. Escalation of Trump's trade war with China also a threat, says World Economic Outlook. A no-deal Brexit and a sharper slowdown in China are the biggest risks to growth in the global economy in 2019, the International Monetary Fund has warned in its latest economic outlook. Amid already falling levels of growth in Europe and China and Japan, the IMF said an escalation of the trade war between Donald Trump and Beijing over the coming months and the UK tumbling out of the EU without a deal would force further downgrades in the forecasts for growth. The IMF basically said global growth would weaken in 2019. Christine Lagarde, the IMF's managing director, said policymakers needed to make greater efforts to prepare for the slowdown, which could become more severe without greater cooperation. But despite its gloomy prognosis, the IMF maintained a far rosier outlook than the World Bank, which earlier this month said global economic growth in 2019 would fall to 2.9% this year. And as I mentioned, the stock markets, the Dow Jones and other stock markets around the world are on a roller coaster ride the last few months. Firstly, when it comes to the economy, this was a statement made some time ago in an interview by Sir Evelyn de Rothschild, who, well, many believe is the head of the Illuminati even, but he's certainly the financial advisor to the Queen and also to the Vatican. So he has a fair bit of knowledge, whether you like him or not, and I think this statement is quite telling.
Television, as you have some very bright people the other day, who said, which I agree with completely, the stock market doesn't really reflect the economy of a country.
The Rothschild family has been at the head of the global banking system for a long time, and when they speak it is worthwhile listening. I think the general public perception is that when the stock market's going up, the economy must be doing well, and when it starts going down, people start worrying. But what if all markets are now so manipulated by central forces that whether they go up or they go down bears little resemblance to what's really going on in the economy of a country and the global economy as a whole? I want to play you some clips of Donald Trump speaking before the 2016 election about the stock market and the American economy.
We have the worst revival of an economy since the Great Depression. And believe me, we're in a bubble right now. And the only thing that looks good is the stock market. But if you raise interest rates even a little bit, that's going to come crashing down. We are in a big, fat, ugly bubble. And we better be awfully careful. And we have a Fed that's doing political things. This Janet Yellen of the Fed. The Fed is doing political by keeping the interest rates at this level. And believe me, the day Obama goes off and he leaves and he goes out to the golf course for the rest of his life to play golf, when they raise interest rates, you're going to see some very bad things happen because the Fed is not doing their job. The Fed is being more political than Secretary Clinton.
Look, interest rates are artificially low. If interest rates ever seek a natural level, which obviously would be much higher than they are right now, you have some very scary scenarios out there. I mean, the only reason the stock market's where it is because you get free money. I mean, me too. I'm offered loans. I have very few loans now. I paid off large amounts of debt. But I'll tell you what, I get offered loans from banks at almost nothing. You feel foolish not taking the money.
So before the election, Donald Trump was saying that a high stock market was a bubble and it wasn't a good thing for the economy. And then, look, the US debt clock now, as of today, is almost $22 trillion in debt, according to the US debt clock website. And that, of course, doesn't take into account the missing $21 trillion that's unaccounted for, which I won't go into that here because that's a whole other subject. But now have a listen to what Donald Trump said about the debt before the election.
Reduce our $18 trillion in debt because, believe me, we're in a bubble.
But whoa, hold on a second, Donald. Didn't you say $18 trillion was a bubble that needs reducing? And yet now it's $22 trillion under your presidency. What's going on?
We have artificially low interest rates. We have a stock market that, frankly, has been good to me, but I still hate to see what's happening. We have a stock market that is so bloated. Be careful of a bubble, because what you've seen in the past might be small potatoes compared to what happens. So be very, very careful.
Trump's words pre-election there were spot on, actually. So they are very contradictory to his current position, however, saying that the bubble could implode, basically, and that it could be far worse than anything we've seen before. And yet now, his words are quite different.
We broke a very, very big barrier, 25,000. And there were those that say we wouldn't break 25,000 by the end of the 8th year. And we're in the 11th month. We broke 25,000 just as we came in now. I have to be a little careful because as we walk out, maybe it goes down.
The stock market is up very, very big today. We've set new records, and I think they'll be continued to set.
Fastest 1,000-point move in history. This is all about making America great again. Agenda. Jobs, 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 $6 trillion in value.
The stock market is way up again today, and we're setting a record literally all the time. And I'm telling you, we have a long way to go. The stock market is up almost 50% since my election. Had the Democrat won, I believe you would have been down 50%. We've set 84 records since my election, record stock market prices, meaning we hit new highs 84 different times out of a one-year period. The stock market is smashing one record after another and has added more than $7 trillion in new wealth since my election. The stock market has smashed one record after another, gaining $8 trillion and more in value in just this short period of time.
So I think many of Trump's words pre-election were actually the truth, but now he's singing a different tune, and we've seen the stock market go down big and then recover big, in fact swinging wildly in the last few months up and down, which is not, well, wild swings are not an indication of health, put it that way.
I think the Fed is out of control. I think what they're doing is wrong. I think the Fed is far too stringent, and they're making a mistake, and it's not right. And it's, despite that, we're doing very well, but it's not necessary, in my opinion. And I think I know about it better than they do, believe me. No, I'm not going to fire him. I'm just disappointed at the clip. I think it's far too fast, far too rigid, far too fast.
One person whom I think has a very good handle on the economy and what's truly going on is Brandon Smith from altmarket.com. And on 20th of December 2018, he wrote and posted an article called The Psychological Warfare Behind Economic Collapse. I just want to go down that article away and read a section of it. The current system was never built to last. Our economy is designed to fail, yet few people seem to question why that is. They tell themselves that this is because greed has led the money elite to self-sabotage. But this is a fantasy. It is not just that the system is designed to fail, but that it is designed to fail according to an organised timetable. The globalist magazine The Economist announced in 1988 the coming of a one-world currency system, one that would be launched in 2018 and that would require the decline of the US economy and the dollar to open the door to the reset. It is no coincidence that we are now witnessing the beginning of a major financial crash in the last quarter of 2018. This crash was engineered starting in 2008 by central banks, first through the inflation of a historic bubble and encompassing almost all asset classes using stimulus measures and near zero interest rates, and it is being imploded today by the same central banks using tightening measures into economic weakness. It is also no coincidence that the globalists have announced in 2018 that their intention is to adapt to a digital monetary system using blockchain technology and cryptocurrency. That is to say, the one world currency system predicted in The Economist is already here. They are only waiting for a crisis large enough to pressure society to accept total global centralization as a solution. Forcing the public to embrace worldwide centralization would require several measures. First, the current system, which as stated is designed to fail, would have to be allowed to crash. Second, the crash would have to be blamed on someone other than the globalists and the ideology of globalism. Third, philosophical opponents of globalism, i.e. conservatives, nationalists, decentralization activists, would have to be demonized or eliminated so that the globalists can build their new world order without opposition. Fourth, the population would need to be sufficiently traumatized to the point of psychological submission and desperation so that when the new system is introduced, they will be grateful for it, thus preventing further rebellion by making the public a willing cooperator in their own enslavement. Sir Evelyn de Rothschild was the head of The Economist magazine when that 1988 cover with the Phoenix was put out. And now I just want to read a couple of little pieces from an article written by Steve Guinness, published on December the 19th, 2018, called Hidden Among the Fury, Synchronized Warnings from the BIS and the IMF. At a seminar of the European Stability Mechanism this month, Bank for International Settlements General Manager Augustin Carstens delivered a speech called Shelter from the Storm. And the speech can be summarised in a number of ways, including the fact that the IMF may not have enough resources to manage a future financial crisis. A symbiosis between the Bank of International Settlements and the International Monetary Fund can be found in the conclusion to Carsten's speech, where he talks about crisis management and building a strong safety net in the event of future turbulence. He refers to reserves of money held at the international level and how there is a strong need for the global safety net meant to be provided by the IMF on top of national and regional arrangements. The global safety net Carstens referred to is the IMF's special drawing rights, or SDR. And down further, shelter from the storm clouds building. The similarity in language from two seemingly separate institutions is a regular occurrence. This is because their objectives for the global economy go hand in hand. In January this year, the BIS and the IMF participated in a joint conference hosted by the Organisation for Economic Cooperation and Development in Paris, the OECD. It's marked one of many occasions when these two economic powerhouses have coalesced, so it should come as little surprise that the Bank of International Settlements manager Carstens was Deputy Managing Director of the IMF from 2003 to 2006, and in 2015 became the chair of the International Monetary and Financial Committee before stepping down to assume his role at the Bank of International Settlements. So in essence, the foxes that are guarding the henhouse have given us a warning that they'll soon be coming to steal our eggs.
I think the challenge also is whether we should move towards an international currency.
And it's probably worth noting here that Donald Trump has some definitely representatives with banking interests pasts in his cabinet, including this man with him here, Wilbur Ross, who was an employee of N.M. Rothschilds and Sons, where he ran the bankruptcy restructuring advisory practice, and he helped Donald Trump in the 1980s when he was in financial trouble with his casinos and they were under a threat of foreclosure. Ross was a senior managing director of Rothschild Incorporated and represented investors in the casino. Here, Wilbur Ross, currently the United States Secretary of Commerce, announced on November 30th, 2016 by President Donald Trump and sworn into office on February 28th, 2017. He was also with Donald Trump on his visit to Saudi Arabia in 2017, and let's not forget that Steven Mnuchin, who is the Secretary of Treasury under Trump, was formerly a partner at Goldman Sachs and also was initiated into the Skull and Bones in 1985. And of course we've also seen that Stephen Schwarzman was initiated into the Skull and Bones as well. In an article this week from Brandon Smith at altmarket.com, will globalists sacrifice the dollar to get their new world order? He makes some very good points, and just a small section I will read here. There is a false notion that paper currencies are the lifeblood of the establishment and that they will seek to protect these currencies at all costs. This might have been true 20 years ago or more, but it is not true today. Things change. The king of this delusion is the US dollar. As the world reserve currency, it is thought by some to be untouchable, a pillar of the globalist structure that will be defended for many decades to come. The reality, however, is that the dollar is nothing more than another con game on paper to the globalists, a farce that they are happy to sacrifice in order to further their goals of complete centralization of world trade and therefore the complete centralization of control over human survival. That is to say, the dollar is a stepping stone for them, nothing more. The real goal of the globalists is an economic system in which they can monitor every transaction no matter how small, a system in which there is eventually only one currency, a currency that can be tracked, granted or taken away at a moment's notice. Imagine a world in which your store of wealth is subject to constant scrutiny by a bureaucratic monstrosity and there is no way to hide from them using private trade as a backstop. Imagine a world in which you cannot hold your money in your hand and access to your money can be denied with a push of a button if you step out of line. This is what the globalists really desire. And by the way, it may be worthwhile noting that on the World in 2019 Economist magazine cover that's now out, they have the Four Horsemen pictured on there. And it's interesting that there was a movie called The Four Horsemen in 2012, which was a British documentary, and it criticised, among other things, the fractional reserve banking and debt-based economic system and advocated a return to the gold standard. Also, there's an article here from 2011, Yale Global Online, from Yale University, called The Four Horsemen of Economics, a global economic path that's unsustainable, unfair, unstable, unhappy, need not neglect well-being. And right at the end of the article it says, the sooner we free ourselves from the shackles of defunct economics, the better it will be for all of us. And that was copyright 2011, the Yale Centre for the Study of Globalisation. So there's your Four Horsemen again. And let's not forget that Yale is the home for the Skull and Bones Club and that Mnuchin and also Wilbur Ross were ex-Yale students. Global debt is $250 trillion, which is 3 times the GDP, and if you add to that more than $2 quadrillion in derivatives and so forth, this can't go on forever. Now, how quickly it'll implode, who knows? I think they will try and implode it in a orderly fashion so they can bring in their new system, but the fact of the matter is it's not going to last forever, and you should be doing what you can now to prepare for what is going to inevitably come. The bubble of everything, not just the stock market, but pretty much everything, was deliberately created by the Federal Reserve and central bankers, and it will be imploded so that they can bring in their new system. The globalists have done similar things for over 100 years. They create a bubble, a debt bubble, and then they deflate that bubble and they cause a crisis, and the central bankers and the elites snaffle up the assets of people when they hit rock bottom. The goal is more centralisation ultimately. So do what you can to prepare as best you can, and then trust God to do the rest in looking after you. I hope this has been some help to you. Don't forget our website is aminutemidnight.com, and we run A Minute to Midnight 100% by donations, and we really greatly appreciate it if people help us out so we can keep this running. Can't do it otherwise. Anyway, that's about it for now. This is Tony saying goodbye, and we'll catch you again with another video soon.